Welcome everybody. My name is Michael, and today we're discussing about the new proposed budget by Mr. Biden. Our president of the United States of America has proposed a budget that for fiscal year 2025 will impact every single area of the American economy, including cryptocurrency. There's going to be a mining tax. There's going to be a rule against wash trading. The mining tax, any firm using computing resources, whether owned by the firm or leased from others, to mine digital assets would be subject to an excise tax equal to 30% of the cost of electricity used in digital asset mining. I don't know how they would measure that. The cost of electricity, would it be something, for example, how the IRS ruled, hey, approximately for every mile you put on your vehicle, it's going to be 67 cents. Would they just say, hey, the national average for electricity is X amount, and based off of this amount for this year, that's what it's going to be based off of? I have no idea. Maybe. We'll see. But it hasn't been passed yet, obviously. If it would be passed, though, it would require miners to report essentially how much electricity they use and then be taxed on that amount of electricity. Again, we don't know how they would exactly tax it, but this would be on top of the gain. All gains would be taxed. So if you're going to sell your assets within a period, if you've been mining, obviously you're mining for a profit, and you have some gains, and you take it to the market and you sell it, the tax would be rolled out on top of that, and it would be rolled out over the next 3 years. So the first year it would tax you at 10%, the second year 20%, and the third year at 30%. So they're arguing that it's because of an increase in energy consumption, and it's attributable to the growth of digital mining. And obviously, we want to help the environment. There's negative environmental effects, and this can have environmental justice implications, as well as the increase in energy prices for those that share the electricity grid with these digital asset miners. Well, the Treasury Department is here to save the day. Digital asset mining also creates uncertainty and risks to local utilities and communities, as mining activity is highly variable and highly mobile. That's what the Treasury Department is saying. And they're predicting that thanks to this tax could bring in $302 million in its first year. That's it. Next year, approximately $302 million just from this mining tax, and approximately $7.7 billion over the next decade. That's huge. The next thing is wash trading. So it's a form of market manipulation. Essentially, you're buying and selling assets in large amounts very rapidly in a short amount of time. And it's usually because you're trying to get losses. You're trying to harvest tax loss purposes, right? So obviously, if you lost money in cryptocurrency, you're able to take those losses forward into the future. So the one and only positive I have, which isn't really a positive, I'd rather have money than, oh, yay, we get a discount on our taxes, but I still owe taxes every year. So I'm able to credit up to $3,000. I forgot, I think it was $3,000 or $3,500. $3,000 for sure. But this is nothing compared to the 5-6 figures that I really lost. The $3,000 helps because it's a reduction in my taxes every year. But again, it's because I lost a lot of money in just a single year. In just 1 week, I lost over $70,000. In a single year, I mean, I went from a very low six-figure portfolio, but around 150,000 at its maximum, to negative 50,000. That was rough. That was certainly rough. So that's the one thing we get. But there's people and corporations that will use negative, nefarious purpose. They will manipulate these markets for their nefarious purposes. They'll use these negatives and turn them into a profit. It's illegal with stocks. It's illegal with most of the regulated assets right now, except there's nothing written about crypto. So the budget eliminates this tax subsidy for cryptocurrencies. It modernizes the tax code for anti-abuse rules that now apply to cryptocurrency assets. So all other securities, all commodities, all stocks, whatever. Well, the White House is predicting that this will bring in approximately $26 billion in revenue over the next decade. That's interesting. The proposal would make it so that the tax benefits of wash trading would only be realized if the asset was sold and not bought again within 30 days. This would incentivize some to not partake in wash trading and increase tax revenue for those who still wash trade. So this is interesting because you may be part of this. I mean, I'm pretty certain that almost all of us watching this video, technically, we would have been part of wash trading, allegedly, because in the past, you're investing in a lot of cryptocurrencies. I had a situation with Ripple where the price was going crazy. I sold it, but then I bought it again, and then you sell and buy, and you do it a couple times just because everything's going hyperbolic, and you don't know when the right time to sell is. So you sell a little bit, you don't sell everything, but then you get back into it, and then someone recommends this other altcoin, and then there we go. And it's not like you're trying to manipulate it on purpose. I mean, maybe this is, going more for people who are doing this 1,000 times with their automated bots, and, they're just putting $1 million into it and claiming a bunch of losses. But you're not intentionally trying to lose money. You're trying to gain money through these quick gains. However, sometimes the market flips, it turns around. You purchased a meme coin that just turned out to be trash. It is what it is. I think this will hurt a lot of people, but that's also why they're probably getting into this, because when we're starting to talk that, hey, this is going to be a lot bigger than mining. I mean, compare that $7.7 billion to $26 billion. That's huge. Now, there's obviously a lot of pushback. It's not a law. It's a proposal, and this proposal needs to get approved. It needs to be voted in. Speaker of the House, Mike Johnson, said the price tag of President Biden's proposed budget is yet another glaring reminder of this administration's insatiable appetite for reckless spending and the Democrats' disregard for fiscal responsibility. Biden's budget doesn't just miss the mark, it is a roadmap to accelerate America's decline. And it's one of the most contested issues in politics right now. It's going to take many revisions before it's passed. This might get knocked out. So there's a chance that some or all of these crypto regulations will be removed or at least modified. Nothing's certain until it's passed, and we're still a little bit a ways from that. The good news is we're generally heading towards a stabler path with cryptocurrency. There's going to be more regulation, but even if things go south in one country, there's other countries that are a haven for cryptocurrency out there. The bad news is if you're an American citizen, you'd have to renounce your citizenship because you're still going to get taxed no matter where you are in this world. But, depends on how much money we're talking about. If you're like one of the Facebook co-founders and you're talking about $600 million, it might be a worthwhile investment. I love my country. Unfortunately, I'm saddened that this is one of those few nations that, they're getting a little stricter on cryptocurrency, more strict, or at least there's certain people in this country, not everybody, certain people that want to make it a lot stricter, and I don't necessarily agree with all of that. I think this is just a bunch of, I'm not going to say the words, but I think most of us would agree that this is just silly. They should focus on other areas. They should focus on taxing, for example, the billion-dollar hedge fund corporations that are manipulating cryptocurrency, not the average Joe here. And both miners, which, you can be a miner and make less than $500 a month, and this is going to hurt you. This will actually, at the end of the day, benefit probably the larger corporations. Yes, they're going to have to pay a larger fee, a larger tax, but it makes it so that a lot of smaller corporations and a lot of normal average Joe miners will disappear because it's not going to be profitable. It's already very hard for it to be profitable right now, and it's going to be even less profitable. So that is that. Thanks for watching. See you guys in the next video, and have a good one. Take care. What are your thoughts?